PIMCO, Pacific Investment Management Company, one of the world's largest investment firms, has been gradually shifting its focus away from U.S. markets in recent years. As a global asset manager specializing in fixed income investments, PIMCO closely monitors economic trends, market risks, and investment opportunities worldwide. This shift in strategy has raised questions about the factors driving the company's diversification. Here are the top 10 reasons why PIMCO is moving its investments beyond the U.S. markets. 1. Rising U.S. interest rates. The Federal Reserve's rate hikes have made borrowing more expensive and reduced bond prices, directly affecting PIMCO's fixed income portfolios. Higher interest rates can create volatility in U.S. bonds, making international markets with lower or more stable rates more attractive. PIMCO is expanding its global exposure to mitigate risks associated with Fed-driven rate fluctuations. 2. Increasing U.S. debt levels. The U.S. national debt has surpassed historic levels, raising concerns about long-term economic stability. A high debt burden can lead to higher yields on Treasury bonds, making U.S. debt less appealing to investors. PIMCO is looking for alternative markets where government debt levels are more sustainable, reducing its exposure to the risks of excessive borrowing. 3. U.S. Treasury yield volatility. Recent fluctuations in Treasury yields have made fixed income investments in the U.S. less predictable. When Treasury yields spike suddenly, bond prices drop, impacting PIMCO's portfolios. By diversifying globally, the firm can reduce risk exposure to these yield swings and seek more stable returns in international bond markets. 4. Stronger growth opportunities in emerging markets. Emerging economies in Asia, Latin America, and Africa are experiencing higher growth rates compared to the U.S. These markets offer promising fixed income and equity investment opportunities, particularly in countries with expanding middle classes, increasing consumption, and infrastructure development. PIMCO is capitalizing on these opportunities to enhance its portfolio returns. 5. Regulatory and tax uncertainty in the U.S. Changes in financial regulations and tax policies in the U.S. create uncertainty for institutional investors like PIMCO. Potential adjustments to capital gains taxes, corporate tax rates, and investment regulations could impact profitability. By diversifying internationally, PIMCO reduces exposure to unpredictable U.S. policy shifts and finds more favorable investment environments. 6. The strong U.S. dollar impacting returns. The strong U.S. dollar has made American investments relatively expensive compared to assets in foreign currencies. A strong dollar also reduces the value of overseas earnings for U.S. companies, impacting equity investments. PIMCO is diversifying into markets with weaker currencies where investments may offer higher returns and better purchasing power. 7. Growing political uncertainty in the U.S. Political factors, including election cycles, fiscal policies, and geopolitical tensions, influence financial markets. Concerns over government shutdowns, trade policies, and economic stability make the U.S. a less predictable investment destination. PIMCO's global diversification strategy helps hedge against political risks that could disrupt domestic markets. 8. Inflation and cost pressures in the U.S. Persistent inflation in the U.S. has impacted corporate profitability, consumer spending, and bond yields. Rising inflation erodes the real returns on fixed income investments, making international markets with lower inflation rates more attractive. By allocating funds outside the U.S., PIMCO seeks to preserve value and maintain purchasing power. 9. Expansion of alternative investment vehicles. PIMCO has been increasing its investments in alternative assets, including real estate, private credit, and infrastructure. Many of the best opportunities in these sectors lie outside the U.S., particularly in Europe and Asia, where governments are investing in long-term economic projects. Diversification allows PIMCO to gain exposure to high-yield investments beyond traditional U.S. markets. 10. Institutional demand for global portfolio diversification. As one of the world's largest asset managers, PIMCO serves institutional investors who seek diversified global portfolios. Pension funds, sovereign wealth funds, and insurance companies are increasingly demanding exposure to international assets to reduce risk and maximize returns. PIMCO is responding by expanding its global footprint and offering more investment options outside the U.S. PIMCO's move away from U.S. markets is driven by a combination of rising interest rates, debt concerns, regulatory uncertainties, and stronger growth prospects in emerging economies. The firm is strategically diversifying its investments to protect against market volatility, inflation risks, and political uncertainty. As global financial landscapes evolve, PIMCO's shift toward international opportunities reflects its commitment to long-term stability and growth.